Hi, this is Jeffrey Kerr at Kerr Financial Group. Today is October 5, 2022. And as we look at the financial markets and all of the turmoil and what's going on and looking forward, I'm reminded of the TV show from the 1980s, Hill Street Blues. And it was a very popular show. I'm sure many remember. And I think it was so popular that the theme song was released as a single and hit the Billboard Top 10 charts. And the show was about a police precinct and on Hill Street. I think it was they never did reveal or name a city it was in. The show began with the captain and the leader kind of going over with all the precinct, all the developments and things to be that was going to be going on. And at the end of his remarks, he would always say, "Hey, let's be careful out there." So I think it's the appropriate cliche to use as we look at the financial markets. So we'll start at last Friday was the end of the third quarter, and it's been a bad year for the stock market. So the Dow for the year to date as of September 30th down 21%. The S&P down 25%, Nasdaq down 32, Russell down 26%. Those are year-to-date numbers. The third quarter, stocks rallied, in from the mid to late July into August, but sold off hard in September. And the quarterly numbers, the Dow was down 6% for the quarter, 5% down for S&P, 2% down for the Russell, and 4% for the Nasdaq. The pain is not, just within the stock market. The bond market has been hit as well. The iShares aggregate is, and I think the Bloomberg Barclays Ag Index are both down, mid-teens, 15% and 13%. And I've seen, some commentary from Morningstar that the bond mutual funds are witnessing their largest losses ever. So, it's a significant, tumultuous time for the markets. And, I think that there's a lot of risk that is still out there. That even with the losses, I think there's still some, potential pain and significant risk looking forward. A couple of items I think that are important. A couple of weeks ago, FedEx pre-warned their quarter, and you think about FedEx as a global company, number one, but also in transportation on all different levels. Small package, overnight. They have freight division. So I mean, they're touching a lot of different parts of the economy, and they pre-warned, pretty badly. Second, another item, I think, the end of last week, Nike came out and said, "Hey, we got an inventory problem." So Nike again with all of the reach and what the products they have out there, they've got an inventory problem. That means I think others, in the retailing are going to have problems, and I think it's a signal that the consumers not spending, and I think that's could be a big problem going forward. A couple of items I think that I want to highlight. Just some, the Wall Street Journal, some headlines just recently, and hopefully you can put them up there. You can read this: Fed lifts rates, signals more sinking stocks. September 14th, stocks sink on dashed inflation hopes. So the inflation continues to be higher, and then towards the end of September, stocks slump as economy reels. So I think these things aren't going to be cured right away. The Fed's going to keep raising interest rates. Inflation is going to be around for a while. Earnings are going to be declining. So it's a pretty dire picture. And the bullish part of this is There's hope that the Fed pivots and stops raising rates. And that's today's Wednesday, the 5th. As I said, the 3rd and 4th, we started the week with two really big rallies in the stock market, and as that has brought about some hope that the worst behind us, and that the Fed's going to back off and everything's going to be rosy. I just don't think that's going to happen. The Fed has not indicated. Fed doesn't surprise the markets. It forecasts and it's pretty transparent on what it's going to do, and they're saying they're going to raise rates. So I think there's more rate increases to come. The inflation thing is a big problem for the markets and for the economy. And that's what the Fed's attack is going to be on inflation through higher interest rates, and it's going to slow the economy. And I think again the problems and the turmoil still remains, and we've got I think some problems. So again, let's be careful out there. Let me know if there's any questions or comments. I'm going to try to do some more videos and concerning the quantitative easing. I had a client ask me about not quantitative easing, but quantitative tightening, about how the mechanics of that work. And I just don't want to take a lot more time here, but I'll try to do one so that viewers can kind of understand what the Fed may be doing in addition to raising interest rates if they start tightening from a balance sheet reduction. So again, I encourage any suggestions, questions, or comments. Thank you.